Good morning. Welcome to Morning Call. I'm Latha, Venkatesh, and with me are Shenoy and Anuj Singhal. Well, we are waking up to very good cues from the global markets. As far as markets are concerned, though I would worry a tad that a market which is rising because bad news is good news is kind of skating on thin ice. As well as the news that we are getting from the Middle East with Saudi Arabia raising prices for Asian buyers, well, that could be seen as positive. It's indicating that there is some growth somewhere, which is why they are willing to push up prices. But nevertheless, from a strictly Indian point of view, that could be a source of worry, especially because today's credit policy.
Yes, indeed, and that's what everyone's focus is going to be on. Latha, good morning. Anuj, hi, morning. Good global cues, strong FII buying, more than 900 crores in the cash market, so that will play its part as well. We'll come to that in a bit. But first up, we've analyzed the expectations to the hilt, but what's your gut?
Well, I would still go with a no rate cut in this credit policy. I think the pros and cons will run for you on the screen. Well, you know, the people who are asking for a rate cut are expecting that inflation has not picked up despite unseasonal rains. Now, we don't have the number. The last number we have was what we already had on March 4th, which is the January number. The February number that we got was actually higher. So, you know, it's only a faith that March numbers have not gone up. You can see it in telltale anecdotal evidence.
And the March number comes out on the 10th of April.
Yeah.
So you don't have to wait too long as well.
Yes, but for the governor, he still doesn't know.
Yeah,
but there's enough. I mean, the RBI has enough data to be able to. It's a clearly well-informed, a very sophisticated central bank, and it may perhaps be very aware that prices have not gone up much, and therefore there is a scope to cut. As well, growth is so badly off that if you have plans to cut sooner rather than later, and then who knows, by June there will be 2 more non-farm payroll numbers, and if they are good, then once again you're, you know, under the cloud of Fed action, so why would you want to postpone? These are the familiar arguments, but the argument for me against is definitely stronger. For one, how can you be so sure that the March inflation has not picked up and that it will not pick up with a lag, that the monsoon will be good? Almost nobody is betting that the back of inflation is broken or back of food inflation is broken. We are still far away from fixing our supply side problems, especially because of the very poor seasons that we have had. As well, you know, the banks have not passed on. That is the big problem. And you know, that brings me to the broader issue. How important are these rate cuts to the economy? At the most, there's 1 more cut. There are some who believe there are 2 cuts, that is 50 basis, but I staunchly believe that there's at the most 1 more cut. So 7 quarters is what the repo will come to. But what will banks do with that 0.25%? They have not passed on 2 cuts. Maybe 1 more cut can just tip them over and allow you 125 basis base rate cut, but not more. The banks are stymied by several other systemic structural problems, the most important of them being the NPL issue. I mean, they have to provide so much that they don't have the scope to narrow their margins anymore. Capital is not coming from the government, from the key shareholder. But the most important part, which I think would be the next battleground between the governor and the government, will be that you have not lowered the small savings rate. I mean, if inflation is running at 5.1% and WPI inflation is at 1%, there is no case for small savings, PPF, EPF, to run at 8.75. I mean, I believe there is a formula of, average of last year or something like that to set the PPF rate. But if PPF is at 8.75, will you, me, Anuj, any of us want to put money in an FD? I mean, you will anyway prefer first exhaust all your Indira Vikas Patra, your NSC, National Savings Certificate, PPF, all your limits, then think of going to the banks. It's unfair. If you're going to make the source of money expensive, how will they cut the lending rates? So this is a no-brainer. It's not going to make any difference to the economy. The only difference the rate cut will make is to the market. And how much of a difference that will make, please ask Anuj.
No, I take your point completely. The constant rant of borrowers is that, 50 basis points has been cut so far, but nothing has been transmitted to you and me in the form of lending or borrowing rates. But I'll come to you about the CRR cut, whether it's warranted or not in a bit. But before that, what about the markets, Anuj? We had a very strong session yesterday. Good buying as well in the cash market.
Yes.
How important is this policy from a market point of view?
Well, Sonia, morning. This morning the fear for me is the deja vu, because the last time you had positive global cues, FI buying, and a rate cut from the RBI.
The market fell flat on its face.
Yeah, the market made a peak that day, and the Bank Nifty fell 900 points intraday. So, but that rate cut was unexpected, of course, and we're not saying that today there will be a rate cut. But today is a crucial day. I think this week is crucial week. This week will really decide whether the correction for this market is well and truly over, or whether the rally that we have seen is a suckers rally, and we are going to go back to 8200 or 8100 or maybe even lower on the Nifty. There is a risk that both could happen this week, or or at least the hint will be there this week whether this market is going back towards 9,000 or moving back towards 8200. FI has bought
and
about.
How much will a rate cut make a difference?
See, just because the last time the market actually sold off from the high point, the market maybe had factored in the last of rate cut. That could have been the reason.
That was my point. If a rate cut comes to it is actually the last of the rate cuts. If it doesn't come, there is actually a hope that one more will come.
Indeed.
That's it. So the rate trade is over.
Indeed, the rate trade is over. So you don't know, you're splitting here literally over the last 25 basis point rate cut. The whole issue now is about transmission in the system. So that is something that of course we'll come to know over the course of the year. So policy itself today may not be as big a trigger. It's an important trigger, normally is, but today's policy could be 2-hour, 3-hour affair. That normally is not the game-changing kind of policy that the market could be hoping for. The point that I want to make about FI buying is that the FI buying is there, but the last few days have told you that FI buying, or for that matter any kind of buying, is now strictly in stocks or companies where there is high quality, and two, there is earnings visibility. You've seen stocks like Sun Pharma, Tech Mahindra, Infosys, ITC, all these stocks do well, and all these stocks have seen delivery-based buying. So there is a bit of defensive flavor to your buying. And also, stocks for companies like Sun Pharma and all, you can say that it's not defensive, it's actually the most aggressive buying now, because at least there's one sector where there is clear visibility of earnings, and there's one sector which is maybe not impacted by anything the government does or does not do. So that's clearly one thing that you have seen. The other point is what's happening with the FI data in index futures and index options, because in that it's quite interesting. Yesterday, if you see, FIs bought about 1,000 crores in index options and open interest went up, while they sold 700 crores in index futures and open interest came down. So how do you explain that? The selling in index futures was mostly profit booking or long unwinding because the market went up. Index options buying, if you see the put and call data, they bought both 8,400 put and 8,900 call. So the market could go literally anywhere. Right now, the smart money is betting on one big move, but it's not betting on the direction. So that it's playing on the volatility of the market. The volatility of the market will go up, and that's why the option premiums will go up, and that's why you've seen this kind of buying. So in short, the market is primed for one big move. We just don't know the direction yet, and that's something that could become clear once the market reacts to policy and over the next couple of days.